Hey, welcome back to another update of my Canadian Dividend Investing Portfolio. So if you're new to the channel, I'll just quickly run through what I do. I'm a Canadian investor. I'm buying primarily dividend-paying stocks. So for all of the stocks that I purchase are Canadian. They're all on the Toronto Stock Exchange. I'm using Wealthsimple Trade to buy stocks, which is an awesome platform for beginners and people with a little bit more experience too, because you're just not paying trading fees, and that's just good for everyone. There's a link to it in the description below, actually, if you'd like to try it. And I'm also tracking everything in this spreadsheet that I made. It's a Google Sheet template, and there's a link to that as well if you'd like to try tracking your own portfolio with this spreadsheet too. But basically, my whole portfolio is, well, the portfolio is sitting around $50,000. But the stock value basically this morning was $49,250. And overall, I'm actually up 7.14%. So I've been at this for about 11 months now, and that's pretty nice, I think, because actually I didn't put in all of this money 11 months ago. I've actually put in a lot of it, over time, and recently I put in a lot of money about 2 months ago. So I think that's pretty decent gain overall, but also we're dealing with coming out of 2020, so pretty much anyone that put in money into the stock market then would have made money. But either way, we're up $3,335. Ah, so close. That could have been so much better. But basically, all of these stocks, almost all of them, are paying a dividend. And what that means is that these stocks, like the price of the stock is going to go up and down. They're usually going up over time, not guaranteed though. But dividends are like cash distributions that are paid out to you, just like for holding the stock. And they pay out about 4%. So basically, on my balance of $49,263, that times 4.14% means that I'm going to get paid out just over $2,000 per year in dividends, which is awesome because the stock price, like I said, will hopefully go up. And then this money is just money that's deposited straight into my brokerage account, so basically into my Wealthsimple account. And it's like cash, and then I can use that. What I do with it, you could withdraw it if you want, but I use it to spend on more stocks, and I reinvest it, and then I slowly, I invest my own money, and then I reinvest this money, and I start building that dividend snowball effect. So yeah, anyways, that works out to about $170 per month. And I'm going to show you the stocks that I bought today, and we're going to come back to this number of 2040 and just see how it is being affected by the stocks that I purchased today. And I'll tell you now it's going to increase a little bit. So anyways, quickly looking at the sectors here, real estate is still my biggest sector by far. This is because a few months ago I put in a lot of money into basically most of my REITs, real estate investment trusts. They were really good, kind of late. They were good buys at the time. They were like late recovery stocks coming out of the pandemic, so that's cool. And then we can get a quick look at the holdings here. You can see the big ones here. These are all basically of the REITs. Actually, almost everything on this side is real estate companies. So yeah, we got the first big dividend here of $172. Or not, it's not one dividend, it's like the month so far. And actually the month isn't over yet, and there should be a few more coming. So that's just awesome. And this is going into my tax-free savings account. So not only is this passive income, it's also tax-free. So it's, you'd have to work even more if you wanted to actually take home this amount from a job, which is pretty nice. So anyways, looking at the portfolio, we'll take a quick scan through here. So mostly everything is in the green. The only ones that are in the red, we got Algonquin Power here, just down a little bit. And I'm actually catching up with, so I'm down $64 on the stock price, but like I said, dividends, that's a thing, and I've actually been paid $43 in dividends from this company. So even if the stock price is in the red, it's possible that you might be up overall. It's one way to think about it, if you like thinking about it that way, but also not everyone interprets it that way. So anyways, that one's down a little bit in the red. Cineplex is down, 13% almost. Interjex is down 5%. I've been waiting to get rid of these guys. As soon as they're in the green for me, basically up a few percent, poof, those guys are gone. And then data communications down 16%. Ouch. That's okay. I'm just going to hang on to data communications and Cineplex and just see what happens. And then for the rest of the portfolio, it's nice to see that it's all basically in the green. So today I was looking at which stocks that I should add a little bit to, and some that caught my attention here were CNR, Canadian National Railway, also Fortis, and also TELUS. So actually if we jump into the spark lines here, maybe let's just take a quick look at, let's set it like the 5 years, and maybe take a look at these one at a time. So TELUS is just basically just experiencing nice consistent growth. They've got a very solid dividend as well of 4.5%, and they're also growing this quite a lot. So it's like a high. I consider 4.5% to be pretty high, and they're growing it at like I think 7 to 10% per year or something like that. Don't quote me on that, but yeah, it's just a solid company that I'm always looking to purchase more in, and we're really close to their all-time high, but it has dropped off just a tiny bit, and I'm just gonna, I decided that I wanted to buy some of those today. Also looking here at Fortis. Again, Fortis also has a really nice trajectory of growth. They haven't really like blown past their pre-pandemic levels yet, and that's something that's interesting to me. And I'm gonna, I'm planning to just slowly add in a little bit more into them, in the event that they maybe do spike up a little bit. They generally don't go down very much, and so if they can continue that, that's cool with me. And if they can't, that's okay too, because I'm still gonna get that 3.57% dividend. And then the last one that I was looking at here was CNR. Let's see if we can find them in the list right here. These guys also have a really solid growth, and this is an interesting one too, because if you see here, we're in a little bit of a decline at the moment, but if you look at the last 5 years, it was going pretty well. Actually, they do drop off every now and then, but I want to show you something in Wealthsimple Trade. So let's jump into that screen first. So here we can see that they're up 57, almost 58% in the last 5 years, but if you look at the last 1 year, we're only up 1%, just 2% basically in the last year. So actually, if you had been buying them at a lot of times in the last year or so, you're actually, sort of would have been better off to wait until now, because it's dipped down a little bit. But I'm hoping that this is just a bit of a dip and they continue back on their upwards plan here. And you can see that I basically purchased, actually it doesn't show you in here. I'm used to using the mobile app, I think. Okay, so let's jump into the activity tab then. We're going to see basically the purchases that I made earlier today. So CNR, about 1 share at a price of $131.34. I also picked up 2 shares of Fortis for about $100 as well, as $111. And then a couple here, 3 shares of TELUS. And what I do is I take these exact numbers, the quantity and the price paid in the market buy, and then I jump back into the sheet and I go log these transactions in the transactions tab. So I have here basically this huge massive list of every transaction that I've done since I started the account, and I just drop them each in here, again noting exactly the right quantity and price that I paid. And once that's all in, and I'm sure that it's correct with the totals adding up here with what was displayed in Wealthsimple, then basically the last thing that I do is I just drop back into the summary page, and the thing that I'm here mostly looking for is how has my annual dividend income increased. And if you remember at the beginning of the video, we were at about $2,040, and now we're sitting at about $2,050. So that's a $10 per year increase, which might not seem like a lot, but like I said, this is totally passive. This is tax-free as well. And this number is always growing. So basically every deposit that I make, it's always climbing up by like $5 or $10. And we can see here that in a year we're up to 2,000, and that's like pretty, I don't know, that's pretty impactful for me. And this number keeps growing with my own deposits, and also a lot of these companies just have like dividend growth, so the companies will just increase their dividends over time as well. So this number will also continue to increase whether or not I deposit or not, as the companies generally decide to grow the dividends too. And then what I do is I just reinvest all of that again, and like kind of this combination of my own deposits, reinvesting this, and the dividend growth kind of builds this really big momentum, and the dividend snowball effect, and this will get bigger and bigger, and eventually later in life it will be enough for me to live off of or pay off, certain expenses. So anyways, guys, if you made it this far, thanks a lot for watching. If you like this kind of video, maybe just leave a comment down below. I always like reading the comments and seeing what you guys have to say and sharing your stuff too. So yeah, just let me know if you've been looking at some stocks this week, or if you have anything that's been on your mind about finance. So anyways, guys, I'm going to sign off, and I will see you in the next one.